Fear is the most important factor why women don't invest. But is investing really that risky? Welcome to Chapter 1, Lesson 2 of Women in Finance, an introduction to investment for women by the Institutional Financial Markets of Pakistan. Today, we'll be debunking some common myths that hold people back from investing and stop them from securing their financial future. Let's begin. Myth number 1. Investing is too risky. First, let's clarify. Investing is simply seeking a higher return on your savings. It's simply buying something with the intention of selling it at a higher price. Secondly, there are various kinds of investment opportunities, some which have a high risk, others which have a lower risk, and some which have no risk at all. When people are thinking about the risk associated with investment, they're usually thinking about the stock market. But there are various other asset classes such as bonds or mutual funds, which ensure that you will not lose the principal amount. And even among stocks, there are lower risk options such as ETFs, which track bond returns. This is the whole benefit of investing. You can choose which asset class you want to invest in based on your risk tolerance. And even the risks of investing in the stock market are overblown. If you had invested 10,000 rupees in the KSE 100 index 10 years ago, you would have had, by January 2023, 21,314 rupees. This would have meant an annualized return of 8%. If you had done so 20 years ago, you would have had an annualized return of 14%. Only gold has generated higher returns in the past 10 years. So yes, while the stock market is volatile in the short term, for long-term investors, the returns have been very attractive. So the fact is that you should invest and hold for the long term. Myth number 2. Investing is too complicated. Excessive jargon has made us feel that investment is something that is best left to experts. But in reality, this doesn't have to be the case. Investing is just about finding a good company with a strong management and which operates in a healthy sector. And while this may seem tricky, it's actually easier than it seems. The reality is that we all know our favorite brands, our preferred banks, and the companies whose products we buy. All the information that you require to make such a decision is usually openly available on the websites of the stock exchanges, mutual funds, or the companies themselves. And of course, this course is a good starting point to introduce you to all these topics. So the fact is, the information required to make a good investment decision is usually openly available to you. Myth number 3. Real estate is less risky. Real estate is one of the most popular assets in Pakistan and around the world. People prefer real estate because it's a more tangible asset. And a common myth is that real estate prices do not fluctuate, they only go up. However, in reality, real estate prices do fluctuate. We just don't know about it because there's no daily pricing of real estate available. Also, real estate is an illiquid asset. Selling and buying it involves high transaction costs and you may have to wait a long time. And lastly, in Pakistan, there are regular scams in real estate. And because the sector is not regulated, people have no real protection. So the fact is, in comparison to real estate, financial markets are strictly regulated and provide liquidity and safety. Myth number 4. You need a lot of money to invest. Many people assume that you already need to be rich before you start to invest. But that's not the case. You can start investing with as little as Rs 5,000. There are several stock trading apps such as KTrade or FinPocket which allow digital onboarding and anyone can open their account. So the fact is, to invest, you simply need to save regularly and start early. Myth number 5. Investing is not Sharia compliant. While it is true that Sharia does forbid certain kinds of investing, such as investing in companies that sell alcohol or who take out a lot of loans, but broadly, investing in stocks, businesses, and Sharia-compliant bonds is perfectly compliant with Sharia. In order to facilitate that, Sharia boards publish Sharia certifications for Sharia-compliant companies. Mizan also publishes the Karachi Mizan Index, which lists the top 30 Sharia-compliant stocks. And this list is updated and monitored by the Sharia board of Mizan. So the fact is that investing in stocks, businesses, and Sharia-compliant bonds is perfectly Sharia-compliant. We hope that debunking some of these myths has empowered you with the ability to make informed decisions for your financial future. Stay tuned for more lessons. Until then, happy investing!